Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Wednesday. I hope you're doing well out there. It is another, crazy day in the markets. A bevy of economic data. We kind of said this. Hey, listen, the week is going to heat up. And it was going to start today, and it has not disappointed. Our toll-free number, 800-951-0592. The website at allamericangold.com. And we had inflation data come out. We had GDP data come out. We kind of talked about it yesterday, how far off the Fed was. We also had jobs numbers come out. And if you're asking me, I don't know that it could have gotten any better when we look at how the data came in. Let's start with the jobs. The jobs came in much weaker than expected. 62,000 jobs created in the month. This was a April number, and when we're looking at this, it was really interesting. Obviously, the number a little lower than expected. Goods producing, that's where, that's your construction, that's where your manufacturing lies, that's where your mining lies. 26,000. And I would say, okay, not horrible there. Construction was the biggest part of it at 16,000. In services, this is where it kind of got muddled. 34,000 jobs there. Inside of it, though, IT down 8,000, professional services down, education and health services down. Leisure and hospitality, only 27,000. So that's a pretty weak number for that category, right? That's your waiters, waitresses, hotel people. That we know what that number. That's usually the bulk of the job creation, and why the number is down. Overall, if you did it by region. The Northeast added 10,000, the Midwest 42,000, so they were kind of like the star. The South, only 3,000 jobs, and the West, only 9,000 jobs, and it's usually the South and the West is the big parts of the U.S. economy. But again, 62,000, I think like I said, I don't know if that could be any better than that. You don't want it to be too low, but definitely low enough. Pay, okay, where are we at? Because obviously that's a big part of inflation. It rose, pay for job stayers rose 4.5% from a year earlier in April. Year-over-year pay gains for people that found a different job, rising from 6.7 in March to 6.9 in April. So if there was a spot that they probably didn't like, it was that, right? Wages still pretty hot. But like I said, overall, you can make a case here, right, that, hey, the economy is definitely slowing. Then we got GDP. Now, it wasn't -4. But it was negative. And I think that's what rattled Wall Street a little bit here. The GDP negative 0.3% in Q1. The first negative print going back to Q1 of 2022. Now, I will say this. Yes, it was negative. No, it wasn't anywhere close to what the Federal Reserve was talking about. But inside of this number, personal consumption, which is us, it was 2.7. down to 1.2. So that was pretty big, right? That is a lot of consumers now not necessarily able to make the purchases that they were expecting. Consumption up 1.8, which was more than expected. Fixed income, that was up, by the way. Changes in private inventories, that was a big number, right? And that was, right, everyone trying to beat the tariffs. Government spending actually came in negative. Not a lot, but we'll take it. Negative 0.25. The first negative print in the GDP, again, going back to 2022. And then the trade number here, and again, this is more on the imports, up 4.8%, which was just absolutely huge. The entire result, obviously, having to do with the imports coming in. Gold, remember gold, right? The big rush there to gold. And it was pretty much a record. So when we look at GDP, those were the big drivers. My guess is, this is just me guessing here, all of that inventory that came in, I think that'll get reversed in the next quarter. So, but overall, not bad. And then we got the inflation data. We'll talk about that next. 800-951-0592, Patriot Radio News Hour on this Wednesday. As we talked, a bevy of economic numbers came out today. Quick look in here at the markets. The Dow is down about 300 points. Not terrible, but I think the funny part here is the data was probably a little worse than they wanted it to be. And then a lot of earnings, a lot of companies, as expected, having some trouble here. The S&P down 57, the NASDAQ's down 250, the 10-year note. So here we go, 417, so lower. That's and again, I think the sign of the data coming in soft. If this can continue tomorrow, if we get, man, who knows, maybe we don't get 220,000 jobless. Maybe we get 240, 250. That would drive that lower. I don't think so. And then, of course, Friday, remember, we're going to get the government number. Crude oil stabilizing here around $60 a barrel. Oil inventory report, not great. Not great. There were some big draws that allowed, probably not going to have oil, at least this week, go much lower than where we're at right now. Gold's down a few bucks here, just kind of chilling out, right? Kind of consolidating here, waiting to see what's next. Silver down about 25 cents. Platinum's off a few bucks as well. Inside of this GDP, they also give an inflation number. The markets ignored this one, and I'm glad that they did. According to the numbers, they said that personal consumption expenditures, the PCE, increased 3.6%. compared with an increase of 2.4%. So it's a lot, right? Excluding food and energy, up 3.5%. Again, that was compared against 2.6%. The GDP price index, hotter than expected, 3.7 versus 3.1. The core, hotter than expected, 3.5 versus 3.1. But like I said, the markets ignored that number and instead focused in on the Fed's favorite inflation gauge, which came in unchanged month over month. They were expecting it to go up 0.1. That brings this number down to 2.6%. And that is the lowest since March of 2001. So, Jason, that was very, very helpful in helping maybe interest rates come down a little bit, saying that maybe the inflation numbers are slowing down. I will advise everybody, don't get too excited. We had another bad low number come off the books. Starting next month, that reverses. So I wouldn't be surprised if maybe this is the low water mark when it comes to inflation. But that was the data. So it was a lot, right? A lot of data out there. I think the biggest thing that they looked at, we had a negative GDP print, but it wasn't horrible negative. Right, remember the Atlanta Fed, their nonsense, right? It wasn't, negative 3 or 4%, 0.3%. Yum Brands, they missed estimates, so we're getting a lot of companies that are missing estimates and warning. Cisco, and I'm not talking about the router company. Cisco, this is the food delivery company. They are the biggest distributor to like bars and restaurants, right? Where do these companies order their food from? Chances are it is Cisco. They missed estimates. They lowered their annual forecast, warned about the consumer. And I don't know that I'm surprised here, but I think that's a good gauge, right? Because we're starting to see these things start to match up here. Remember in the jobs, leisure and hospitality, which is, your bars, your restaurants, not a big number this month. And then Cisco says, yeah, hey, guess what? Jason, these bars and restaurants, they're ordering less. And in a lot of cases, some of them are going out of business.
Yeah, we've been talking about this for a while, dealing with the small businesses that Joe and I deal with, and I've been dealing with quite a few recently. And so I can concur personally. I was talking to a customer yesterday, and she cleans homes, right, Joe? So, and she does it. She's small business. She does it all on her own. And she said, well, this is the first week since I've been doing this that I didn't have any customers lined up to clean houses for Monday, Tuesday, and Wednesday. Just, cleaning your own house is one of the things you do when you need to cut the expenses, right, Joe? There's so many indications of people not having enough money for the standard of living they have. And what's the first thing you do, like any business, as running a household, is you start cutting expenses. That's always the easiest thing to do, is you cut expenses, because it's always the generating more revenue, more money coming in, Joe. It seems to be the stickier part. So the easiest thing to do is eat beans and rice, right, instead of going out to eat.
Well, and again, right, those are little things, right? Super micro. This is obviously in that whole AI data warehousing. They miss badly, lowering their forecast significantly, saying customers are starting to delay decisions and moving sales back and saying, hey, you know what? I know we said third quarter. Maybe fourth quarter, we'll get back to you. And then last but not least, and we saw this coming, the discount chain, Family Dollar, Dollar Tree bought them. Didn't work out so well. They're going to be bought by a hedge fund. Jason, they're going to close 1,000 locations as leases expire, and they're saying, hey, this is going to start effective immediately. So just another one of those signs. Listen, it's not horrible, right? Negative 0.3 on GDP. I actually think that was a pretty good number, considering all of the trade deficit numbers, which were really big. So those hurt the GDP, and I think that could hopefully reverse itself. But there is something that it caught my eye, and I don't know how this is going to end up working out, but it has to do with copper again. Now, remember, copper has been surging, right? Gold's been surging, silver's been surging, but there's a report out of Merkia. They are a Geneva-based trading giant. They're huge. Copper is what they do, right? And I'm not talking about mining copper. No. I'm talking about delivering copper to whoever's ordering it. They came out and said the copper stockpiles in China, which are enormous, by the way, are running out. And they said it may be a few months. It may be only a few weeks. And they say be prepared for one of the greatest tightening shocks in history. Now, that's saying something, right? We've seen some metals that have gone completely crazy, right? Remember nickel, right? Remember the thing with nickel, and all of a sudden, right, the whole world was going to go bankrupt, and they basically said, okay, we got to cancel all these trades and all that. This is copper we're talking about. This is a mainstay metal, and what they said is that for the first time, really ever, China and the United States are competing for copper. Normally, it's just China. I think with all of these tariffs, people are like, well, I'll buy the copper here at home, right? I'll buy it for us, and I won't have to buy it from China. And now they're saying that China's warehouses have been obliterated, and they're saying at the current pace, now I don't know how long this lasts, that they will be completely at zero by the middle of June. But they said, they put an emphasis, the fact that it's so thin now, there's a potential, Jason, that people panic, and all of a sudden the country that had the largest copper warehousing in the entire world is going to be out of copper.
Yeah, I've been seeing a lot on copper. I was big into copper when I joined up with Joe. I used to go through boxes of pennies and pull out the copper pennies, and I'm currently looking because, Joe, the prices. Let's just see where we're at, because the funny thing about copper is it's kind of like silver. The price was getting really, really up there, and then suddenly, just like silver, it just sort of stopped. So I'm looking at today's price. Yeah, so
it's down 5%.
Yeah,
right, down 5%.
It's for $10 of Lincoln copper pennies. You got $27.63 worth of copper in there. That has been over $30. It was over 3 to 1 for a copper penny. So it's a frustrating one, Joe, because it's like silver. So I think what we're looking at, because there's so many silver people that are so frustrated that silver hasn't taken off like a rocket ship. And I've had people come in and tell me, well, Jason, should I buy gold? Should I buy silver? And you hear a lot of people, the silver ratio, the silver to gold ratio, silver's going to catch up. And now that copper is having strains. You hear Joe talk about copper having strains. It might take more than just shortage of silver to push it. You might need shortage of copper, shortage of nickel before, because some of these metals and some of these products, like a catalytic converter, you can use platinum in the catalytic converter, but you can also use palladium. So you can see why those two prices of those two items, you look at, they're both around $1,000, where palladium was like $2,700 or even more. So Joe, what I see is, and people are talking to me about the gold to silver ratio. I don't know how long that these markets can be controlled. I fully believe these markets a lot friendlier than the TV tells you it is. I don't think the America versus China thing is nearly what they say it is. However, if the world, meaning China as a country and America as a country, needs certain amounts of stuff to make their stuff, that will push the price at some point. But what I'm saying is the world as a whole, the economic system works together. The banking system works together, almost every country. That's how they think they can keep these prices down. I don't know how long that'll work, but at some point they won't be able to. I believe the gold to silver ratio can go heavier gold's way. I actually believe we can see gold at 150 to 1 or even 200 to 1 because gold is an economic metal and we're having an economic problem right now. And so gold, I think, will just keep going. At some point, and this is why I think they need a market crash, Joe. They need the markets to cool off and they want to inflate their way out of this. That'll change. They don't want silver and copper and nickel to go up in price because everything will just explode, Joe. So I think gold's being allowed to run because they're doing everything they can to keep the industrial metals lower because that's a bigger problem than gold. Because there's a lot more of that has to be mined, Joe. So metals as a whole is a good place to be in, Joe.
Yeah, absolutely. We'll be back. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Wednesday, talking about these other metals. The premium now in Shanghai was $35 a ton in February. It's now almost $100 a ton premium. That was going into this morning. By the way, that's back when, go back to the last time we saw copper start moving here. This one, I'm a little more nervous about now because of the inventory levels. The last time we had these high premiums, China still had a lot of silver, or a lot of copper. This time around, they don't. And I think as copper goes, I think really what I'll say the other metals, right, silver, platinum, palladium, they tend to go with it. And it's funny because you never know what's going to walk in the door next. What was it, a week or two ago? We sold all that platinum. I can't even tell you the last time I even ran platinum. If I've done it in the 20 years that I've been doing, 20 plus years I've been doing this, it's been few and far between. I ran platinum more, what was it, a week and a half ago than I did in my other 20 plus years combined. I got some more. I got a different item. I've got 60 half-ounce platinum American Eagles. These are like unobtainium. I called all the wholesalers, and I just asked, hey, got any half-ounce platinum Eagles? Nope. I looked online. Do you know what they sell half-ounce platinum, American platinum Eagles for? $650, $700, $750, $550 is what I have them for right now. And I'm just going to tell you, here's the thing. That is like $5 more than what the wholesaler will pay for it. So I can just dump these, and I get like $645 or $545. I'm like, you know what? Screw it. $550. You can buy one. You can buy them all. But Jason, nobody can touch that price because guess what? It costs more than that. If you can even, the wholesale, they just don't have them.
It's an opportunity for the audience to get their hands on it for the same price as what we would dump them for, essentially. So that, so we lose nothing if nobody calls us on these. Joe and I both know we've sold a lot of platinum last week. Joe didn't realize we had as many as we have, which is 60 of these. Jason
He's the one that got them, and I had told Jason, I said, well, I'm just going to dump them, and I was like, I called everywhere. Let's just dump them. And then Jason's like, we've got 60 of these. Because I was like, okay, I don't want to go out, and sell 3 or 5 or 10. It wasn't enough to mess with. And I was like, what? Oh, let's take one shot at it here. So here you go. Here's your one chance.
Yeah, we're shipping stuff regularly to the distributors. There's a lot of selling going on. And by the way, just to remind you guys, we do buy gold, silver, platinum, which is, how we got this. So we're regularly shipping stuff off. So it's not going to, literally I was supposed to get this stuff ready to ship yesterday. And so we're trying one more time. It's just basically, this is completely a benefit to the audience only, because these are already sold out. That's how you can look at it. This is already a sold out product. It's already been sold essentially, but hey, for if you guys want to give us an extra $5 so we can meet with the customers to get them into your hands, that's almost nothing. Really, Joe, I was thinking Joe was coming out at $575, so we can make a little bit more. But this is a good way to blow them out. So let's if you guys want some platinum, this is cool. And they're cool coins too. One of the reasons that the distributors don't have a lot of these is because the U.S. Mint just didn't. I don't think they really even wanted to make a lot of these. And so
and they don't. And they went a bunch of years without making them. Listen, platinum's a very hard metal. And it really tears up the minting machines. It's hard to work with. So the U.S. Mint barely mints any of them. And lately, like some years they didn't mint any. Other years, well, I'll just do a 1 ounce. You don't get a lot of the fractionals. Usually when you got platinum, you're talking about Canadian or Australian, because they're the only ones that really mint a lot of platinum. But these U.S. Platinum Eagles, they just never come up, ever.
Yep. And then because there's typically a lot less of this floating around, I mean, they don't have to mint a lot of these because any industry or the government can just hold it in bars, and then when they need it for catalytic converters or whatever, they can just break the bars down and turn it into what they want. So anytime you see gold and silver coins, it's because there's a lot of gold and silver, and the individual likes to hold it, so they make a lot more of this stuff. The rarity stays the same, but typically you don't have a lot of people wanting to hold platinum, and there's just not as much of it. So it's generally for the more sophisticated metals owner. But if you're somebody that has gold and silver and you just want to have something on something else, sometimes it's just nice to have something else. I can tell you how many of the customers on the platinum side, I just wanted to have some platinum because I just don't have any. You never know. Look, platinum, palladium. Platinum is always more expensive than gold. You talk about rebalancing the gold to silver ratio, which I think gold's going to keep pushing past. Instead of everyone say, oh, 50 to 1 or 25 to 1, I think we might see gold go 150 to 1 to silver. I mean, how big the economic mess that's coming could force that. But silver and platinum to gold ratio will get better. And what a great time to get in and get this. I mean, platinum used to be $2,700, $3,000. Platinum used to be more than gold. Rhodium, I haven't even checked rhodium lately. Rhodium goes, I think it was like $40,000 at one time, and then it's come all the way back. So one of the reasons we don't sell a lot of this is because, these things can misbehave. Well, when it's at its bottom price, like platinum is right now, there's no misbehaving. Platinum can't go to $500. It's just not. There's no way. It's got all up potential. It's just how much intestinal fortitude do you, the buyer, have? It could go up in 6 months. Could go up in 3 years, but it will start catching up to gold. It absolutely will. You'll see it, and there is only so much of it. I think there's less rhodium than platinum and palladium, and then I think is there less palladium and platinum than gold, right, Joe?
Yep.
There's only a few metals that are more precious than gold.
Yeah, that's right. Only a few. 800-951-0592. This is an absolute steal here. You're talking about $100, $150, $200 less than anybody out there. Half-ounce American Platinum Eagles. America! 550 call. 800-951-0592. We got one line open. Platinum Eagles. We only had 60 of them. They're a half ounce. And we're basically giving them to you what I can sell them for to the wholesaler. $550. 800-951-0592. Jason has them. Phoenix. Jason will get them shipped to me, and they'll be down here. Well, it's already Wednesday, so Phoenix, you can pick them up next week. Colorado, you can pick them up right now. By the way, the Treasury refinancing, as expected, another $125 billion. $58 billion in 3-year notes May 5th. $42 billion in 10-year notes May 6th. $25 billion in 30-year notes May 8th. So this is another, again, more supply coming into the market here. We'll see how it goes. They did raise some of the tip auctions by $1 billion apiece, but in line with what everybody was expecting, they did have a note that they are in wait-and-see mode when it comes to its debt management. They're saying that the fiscal outlook, very uncertain with the huge tax and spending packages, and, we've heard Donald Trump talk about these packages over the next few months. It is not clear yet whether federal revenue will ramp up or back off when it comes to the tariffs, and will we see an economic downturn? But everyone agrees we are running deficits of $2 trillion a year, and it seems inevitable that the debt is only going to go higher. The Treasury did say that they stand at the ready if they've got to buy treasuries to, I don't know how that works, but they're gonna, if they need to step in, if the Fed's late, they'll step in. And then, Jason, another thing that was mentioned is a lot of these stable coins, they buy a lot of treasury, so they're saying, hey, we've got at least some new demand out there that we didn't have 10 years ago.
Right. Yeah. Things are changing for sure. Things. There's a lot of changes, Joe. That's kind of a lot of what's going on here. Is that we have a long in the tooth economic system that's put in, and I would just say essentially since Bretton Woods. There's major changes going on. I think really a lot of emphasis should be put on the 2008 housing crash. It was telling the world that there was a scam there. But economic systems will run scams to get every dollar they can when something is not working very well. And what do they do to patch up this colossal scam where very rich individuals were sucking the money out of those down below? And that's really what happened. People that were owning homes, trying to invest in homes, they got their homes put into a scheme where the system benefited off it, blew the thing up, got bailed out by the Fed, and then they scooped up all the cheap houses at the end. And where did the average person end up? Oh, I'll get it back. I'll get out of my bankruptcy. I'll save some money for down payment. I'll get back into a house. And I'll tell you, a lot of people that tried really hard, 2015 maybe, get back into a house, Joe? Well, a lot of people that don't understand this stuff, they're going to lose another house and another bankruptcy and another colossal crash, which is why we hate the Federal Reserve and central banks, because they take advantage, in a system where they shouldn't be involved in our government and taking advantage. It's ugly. And so what Joe's talking about is the meisters and the money masters of the universe, so to speak, are weaving their webs as they see they're salivating at the next crash. These guys love. Why do you think there is these big crashes? It's because there's guys that take huge advantage. And what Joe and I try to do, and we try to do it ourselves, and we try to do it for our customers, is look, we try to help you position yourself, especially on the saving side, which gold is the saving side. Your money will weather this storm. Because sure, there's places you could put your money and take advantage. There's all those guys out there saying, put your money in this and put your money in that. And when everything goes crazy, you're going to benefit. But what if that one thing you put your money into doesn't go well when things crash? I don't know what property prices are going to do. I hear a lot of people say, well, the property prices will go way, way down. I think property prices are going to go sideways and maybe slightly up. If they're going to inflate this thing hugely, I've told people this over the years, especially since COVID and the inflation. If your house is $404,000 or $400,000 and it goes up to $404,000 in the course of a year, you're thinking, well, my house went up. It didn't do a lot this year, but at least it went up. But in the inflation that's coming and the inflation we've been through, it skews. It makes it murky for you to see what's going on. If the price of everything else goes up 11%, then your house price crashed 10%. These are the confusing games that are being played on upper levels, and this is why you have to have your savings in gold and silver, platinum today. And it's why if you decide to invest, Joe, you got to be careful where you're putting your money. There's a reason that Warren Buffett is cash heavier than he's ever been and is selling his own stock. There's a reason that Jamie Dimon is selling for the first time ever his own stock in JP Morgan Chase. Right, Joe? It's because things are getting ready to happen. When Joe's talking about USD, a crypto stable coin is being used, times are changing, and people are going to want to know what to do. And Joe and I are going to do the best we can to help guide you. But be careful, right, Joe? Be careful. And man, you got money sitting in the bank. That is a bad place.
Yeah, boy. Again, listen, I think Jason's kind of nailed it here. I don't think people are really prepared for the avalanche of spending that's getting ready to come out of Washington. And I think that you're going to be shocked at what happens to really the price of everything at moving forward. And again, this is how debt works, right? Got to have more of it. 800-951-0592, Patriot Radio News Hour. Joe and Jason wrapping up this Wednesday. Don't forget, jobless claims tomorrow, and then the government jobs data comes out on Friday. We got ADP today, well below expectations. GDP, a negative GDP print. Again, also, I guess, call it worse than what they were hoping for. But was it, right? Because now maybe we can talk about rate cuts again, the Treasury refinancing and saying, hey, listen, right now, we're going to wait and see how much more money we need to print once all of this, the tax cuts and the spending bills come out. 800-951-0592 is our toll-free number. And again, when you hear that, that's all positive for what we do. More spending. That's what they're saying. That's what to expect. We're running this incredible opportunity on half-ounce American Platinum Eagles. We're already almost halfway through. We had 60 to start. We're almost halfway through this. And so they're only $550. Go look online. If you can find them for the companies that have them, they're $650, $700, $750. These things are unobtainium. And we're just giving them away here at $550 at 800-951-0592. And Jason, and again, some people do. I actually have a client, he built a lot of his portfolio with platinum, but this is just something unique, something different, and I actually think very well positioned, especially with the story about copper in China and copper warehousing being essentially eviscerated right now. You could see these other metals really start rallying here.
Yeah, and that will then make silver go higher. It'll make copper go higher. And Joe brought up the nickel thing. That was in China, essentially. At least that's what we were told. I don't believe anything really, but
right. Yes.
But essentially, they had to shut the market off. That's the kind of control they have over these industrial metals. I think we need to see the copper shut off because of a price raise one day, or silver. I mean, they don't want to do it silver, Joe. Let's say silver goes up $5 an ounce suddenly in the morning, and then suddenly silver trading stops. They know they don't want to do that because silver is much more visible than copper or nickel and some of these other ones, aluminum, zinc. When we start to see a daily rise in one of these industrial metals where they have to shut the market off again in some part of the world or whatever, and then we start to see it happen again, they know they're going to be pushing people into the investment side of things and hoarding, and then you're going to see the price of these metals really take off. Gold's already really taken off. Gold will benefit from the industrial metals taking off.
Oh, sure.
Because the flight to safety will just get even more intense. It's like if there's not enough copper, that means they're not going to make enough stuff. And then there's going to be another power outage in Spain, so I better have more gold. So it's just going to push this whole thing. This is how people think, right, Joe? We talk about prepping. You have enough food at home, right? Well, economically, your prep is these metals, Joe. That's your prep. That is your economic prepping.
800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping it up